Lynn, from your perspective, what are you seeing right now in terms of how credit boxes are shifting or tightening?
Well, this goes on all the time. Credit boxes change without notice to the employees of the bank. And also that filters down to borrowers and people like us. But right now, specifically, there's a few things that are happening. Banks are definitely in the SBA world shying away from smaller loans. They're not doing the smaller loans because SBA recently changed the rules and went from a much looser standard, and the banks were able to use a lot of automation in approving small loans. And this made it easier and more profitable for banks to use the program. And when SBA sort of pulled the rug out from under them, a lot of them stopped doing that. Now, that's not to say that they were making all good decisions on small loans, but as a lot of us in the industry understood, small loans need more attention than just pulling a credit score. And it's not exactly the most profitable thing for banks to do. So they're shying away from smaller loans. As far as larger loans are concerned, banks are looking at specific industries. They get nervous if they rely heavily on inventory that may be subjected to tariffs. So that scares them. They're uncomfortable with that. Now they could be uncomfortable with the price of fuel, and that could affect different things. The SBA lenders who were doing small loans have found that there's a lot of early defaults, so that they pull back the credit box. And that's what's happening in a lot of lenders right now because of that. So these are the reasons why the credit box is shifting now, but credit boxes shift all the time. So to go back to what Ami said, it's really important for borrowers to understand that every lender has different credit appetites at different times. So one who says to them, we don't lend in your industry, doesn't mean that others don't and still do.